Are you one of those buyers still out there wondering if this is a good time to buy? Well, guess what I found for you guys? This is a great loan program for everybody out there still on the fence about thinking about buying. So keep watching to find out more. Hi everyone, I'm Sandy from eXp Realty. I'm your Hawaii real estate agent, and I have a great guest here today. Her name is 𝗦𝗢𝗧𝗧𝗦𝗢𝗕𝗏. She's from 𝗢𝗛𝗓𝗓, which is the Paramount Residential Mortgage Group of Hawaii. Hi, 𝗦𝗦𝗧𝗧𝗦𝗢𝗕.
Hi, thanks for having me, Sandy.
Of course. Thanks for coming. Thanks for taking the time. So you are here to talk about one of your great programs, which is the 2-in-1 interest buy down program, right?
Yep. It's a great program to use in rising interest rate environments like
Awesome.
today.
Oh yeah, especially today, right? Yeah, because Hawaii prices are crazy. Okay, so before we get into the program, I'd like you to maybe talk about your company first. PRMG is rather newer to Hawaii, is that correct?
So we've been in Hawaii for about 5 years. PRMG was started in 2001, so we've been around for quite some time now.
Mhm.
We're one of the top mortgage lenders in the continental United States, and we're just breaking into Hawaii and getting involved here. But we, as a company, have a passion to serve. So we like to help first-time home buyers, investors, and second home buyers, especially in Hawaii, to buy their dream home. And where our office is located by the airport, we're in that big building that's got the humpback whales and the diamond head mounted on this, painted on the side. So local in Hawaii, and so yeah, so we enjoy it.
Awesome. How about yourself? How long have you been in the mortgage industry?
So I've been in the finance industry for 25 years. I came into the industry in 1997,
Mhm.
and then also I worked in investments for private wealth advisory for 11 of those 25 years. So I have experience on both sides, both lending and investment. So I'm able to kind of put those two together for a wealth strategy, using our greatest investment that most of us have, which is our real estate.
Awesome. Wow. You don't look like you're old enough to be in the industry for
I am.
25 years.
Thank you. Neither do you. So thank you.
No problem. Okay. Well, without further ado, I'm going to get into the topic right away so people can hear about this great program that you have. Once again, it's called the 2-in-1 interest rate buy down program. So I'm going to let you take the reins and then just go off and explain it to everybody watching.
Okay. All right. Thank you so much. So, um, we have recently brought back the 2-1 temporary buy down to help buyers to afford their homes better. So, with the rising interest rates, what's happened is the buyer affordability index, or the ability for a buyer to afford a home, has decreased. So, what we've done is we have this 2-1 buy down, and basically for the first year, your interest rate will be 2% lower. And then for the year after that, the second year of homeownership, your interest rate would be 1% higher. So, 1% lower than it would normally be. So, excuse me. So, the first year, your interest rate would be 2% lower. And the second year, your interest rate would be 1% lower. And then the third year, your interest rate would be at the full level where it's supposed to be.
I
So I
see.
just wanted to share my screen too, so that you can just kind of see what I'm talking about a little bit easier. So what is a temporary buy down? So the effective interest rate that you pay is reduced for a specific time period. That's what I was just talking about. The interest rate that you're paying is reduced for 2 years and then reduced for 1 year. Okay, how do we do that? We reduce the interest rate by paying an upfront fee, which is placed into a separate bank account for you. Now, that upfront fee, it is not paid by the buyer themselves; it's actually paid by the seller. So this is a fee that the seller would be paying in order to help a buyer to afford a home. Okay. The next part of this is a portion of the upfront fee, or what we call the subsidy, is allocated each month to reduce the buyer's payments during the buy down period. So let's say the subsidy account has $8,000 in it. So every month, about $400 or so will go to subsidize the mortgage payment. So $400 would be paid out of that account, and then the buyer would make up the rest of the balance of that. And now I will show an example of that. So,
That's good.
okay, so why would you use this? So you would use this to afford the home in a rising rate environment. So the temporary buy down is kind of a way to help a buyer to afford a home as they're making as you know, as they're kind of growing into themselves. So as they working into a job, and you know they're going to get a higher salary in the years coming, or maybe they're going to have somebody move in and help them with the payments, or you know, maybe they're going to finish up with school and then go into another career entirely that pays more. So it helps to afford the payments today. All right, and then the seller can prepay a portion of the buyer's interest. There's no other way really that a seller can help a buyer to afford their mortgage payments. And so that's why you would use a temporary buy down, just to afford a home today that you might not really be able to afford until, you know, 2 or 3 years from now. So what's the difference between the temporary buy down and the permanent buy down? So I think it's pretty common knowledge to know about discount points. So in a permanent buy down, you can pay discount points to get your interest rate lower. Now, a lot of people utilize that. So, you know, the par interest rate might be 4.5%, but if you pay 1%, then you might get an interest rate of 4.25%. So that's considered a permanent buy down. Okay. The temporary buy down is only for a short period of time, like 2 years. And the interest rate will increase each year until that you hit the actual interest rate. Okay, so that's the difference. And I just wanted to kind of go through what types of loans that we could use the buy down for. We pretty much can use them for any type of loan except for portfolio mortgage financing. So we could use them for conventional, which is you know, the Fannie Mae and the Freddie Mac type of loans. And you can use them for government, which are FHA, VA, and USDA loans. So that's quite good. They can be used with the affordable home programs. And so this is something really that every buyer should know about, and every lender should be helping their buyers to achieve this with the sellers. Okay, there is a minimum score requirement, which is 620. For most of these loan types, except for FHA, you're going to need a 620 score anyway. So that's not usually coming into play, but you do need to have a 620 score in order to achieve this. It is for fixed rates only, owner occupied properties only, purchase only, and for single family residences, PUDs, and condos. So this buy down does not include the 𝗦𝗦𝗕𝗏𝗏𝗧 in Hawaii that we have, and also any type of co-ops that you might purchase in Hawaii.
Okay.
So Sandy asked me to give an example of what a actual payment looks like when you buy it down. So I want to go ahead and share that with you. Let's see. So here we have the Robinson Ohana, and they want to buy a home whose loan amount is $450,000. Okay, so that's their loan. And let's say today's interest rate is 4.75, and they want a 30-year mortgage. So just wanted to show you how this works. So for the first year, if we buy the rate down by 2%, then the first year, the effective interest rate is going to be 2.75. Okay. And the second year, the rate is going to be 3.75, because we'll buy it down to 2%. And then the next year increases 1%. And then the third year, it goes up to the full 4.75%. Okay. So the full payment based at 4.75 is going to be $2,347. So
that's per month.
So that's the payment. That's the payment at 4.75%.
That's per month,
okay?
Right? Okay.
Principal and interest.
Yes.
The first year with a 2% buy down to the interest rate of 2.75, the payment would be $1,837. So as you can see here, it's $510 lower roughly than the actual payment would be if you were not in the 2-1 buy down program.
Mhm.
So that's a big savings the first year, especially when you're just getting into the house and you've had to pay closing costs and buy things for the house like drapes or new towels or whatever it is that you want to buy. So it's kind of things are expensive usually the first year when you're into a house. So that $500 a month savings is very helpful. The second year, when the interest rate goes to 3.75, the payment would be $2,084 a month. And then, so this is roughly $263 less than the fully amortized payment. So you still get roughly half the savings that you would get from the first year. So, and then the third year, the payment goes to its full payment of $2,347. Now, earlier we talked about the subsidy and what the seller would be paying for the buyer to subsidize this. So the seller's subsidy comes out of the amount of money that they would receive at the close of escrow. So it's not exactly cash that they would be bringing that they have in their bank account. Rather, it's less cash that they would receive at the close of escrow. Okay, so the way that they calculate this buy down is they take how much it would cost to take the full amount of the payment times 24 months gives them this amount of money. Okay, then they multiply the first year, the amount of payments times 12 months, and then they have that amount. And then the second year, they have the payment times 12 months, which gives them this. And they add the reduced first and second year payments together, and then that comes up with $47,053 in this example. So how to determine the amount of the subsidy is they take the full amount of the full note payment and they minus out the total amount of the buy down payment, which gives them the subsidy. Right. So this is the difference in interest payments that the buy down produces. Okay, so this is called the buy down subsidy. So at closing, the seller contributes this amount, $9,284.52 in this example, the buy down subsidy, to a bank account. And each month, a portion of the payment, basically the difference between the full note payment and the buy down payment for that year, is taken from this subsidy account and then applied to your payment. So that's how they create the buy down lower payment for the buyer.
Awesome. So basically for the buyer, it really doesn't cost you anything to get into this program.
It doesn't cost anything at all. The beauty of this program is that it doesn't cost anything. And it's normally used in environments like we're going into right now, in real estate environments where we have a decreasing purchase price environment. So for a long time, we had the purchase prices in Hawaii just skyrocketing. But now we're kind of seeing that curve kind of invert a little bit, and it's coming down. So sellers now are getting motivated to get their homes sold. So if they were not part of that, part of all of those sales and all of that frenzy, buying frenzy, if they were not a part of that, then this is their chance really to get their property sold quickly, and by offering this seller paid buy down to buyers. And it also leaves them with a really good feeling of helping somebody that wouldn't normally be able to afford a house. They're able to help them to afford a home. So that really motivates a lot of sellers.
Yeah. So in 𝗏𝗏𝗧𝗏𝗧, where I mostly base my business, I've noticed within the last 30 months, for example, if 20 houses sold, out of that, maybe 80% sold for less than asking. So it really reflects what you exactly talked about just now, about how people are having to reduce their listing price or selling price. So this program fits perfectly within what we're talking about right now.
It does. It truly does. Yeah, it is a powerful tool for buyers and for sellers. Yeah.
Right. Okay.
So, and if a seller offers that they do this, they're going to get a lot more people coming to look at their property,
Sure.
and they will be able to command, I think, a much higher purchase price actually. So you could create a bidding situation and drive that price up, knowing that part of that, higher purchase price might be used for this buy down, but you're going to get the buyer into the home. So I think that the sellers can use this as a strategy to create more attention for their listing. And in the long run, at the bottom line is that they would actually come out ahead. So
yeah, that's the most important thing, as you mentioned, getting the people into the homes. It's not that we don't have enough homes right now. It's just that, the interest rates are a little bit high and the prices have always been high in Hawaii. So, buyers are a little bit reluctant, but hopefully, like you mentioned, this program will incentivize a lot of people to maybe look at the market right now and say, hey, maybe this is not a bad time to buy. There's a lot to choose from out there. Then compared,
there's a lot to choose from, and also it's a lot less money to buy than to rent a place in Hawaii.
definitely.
So
Yeah.
so it's a way to afford it now, as our young families are making their way, and they're just getting started in their careers, but in 2 years in their careers will have taken a little bit more momentum to them, and maybe they got a raise, or maybe somebody will finish up school and go back to work. And they'll be able to afford the payments better as they graduate into
That's true.
the payments, higher payment.
Thank you.
Thank
One
you.
thing that I do want to go over, the example that we went over where somebody would buy the house for that amount, depending on your what kind of down payment that you have, the rates are going to vary a little bit, correct?
Yes.
Okay.
So
So if anybody has any questions about, hey, I can't put 20% down, is this going to work for me? Give a shout out to 𝗦𝗢𝗕𝗏. She will do all the calculations for you to figure out what the best option is for you out there. And then we can definitely figure out a best plan for you.
yes, definitely. Thank you so much.
Awesome.
Thank you for having me, Sandy.
Anytime. Is there anything else that you want to mention about PRMG or anything about yourself?
I think that what I wanted to mention was to any buyers that are out there right now looking, I wanted to just say that the best thing that you could possibly do for yourself is to get a conditional loan approval. So my lender, PRMG, offers conditional loan approvals even if you haven't found a property yet. So basically, we'll do an application together, and then I'll get your income and your asset documentations, submit it over to an underwriter, and we can actually get you a conditional loan approval. This is a lot stronger position than a pre-approval or pre-qualification. You've already been looked at by an underwriter, and the only thing that you would need is your purchase contract, your appraisal, and your title report, which makes closing a lot quicker. I mean, closing, probably you could do that in 21 days or so. And also it's a stronger position to be with when you've got Sandy making your writing your purchase contract. It's a stronger position to being with the sellers, because the sellers would much rather have somebody who had a conditional loan approval over somebody who's just got a pre-approval or a pre-qualification. So if you are looking to buy a house, it's better just to do the work before you actually find the house and get your conditional loan approval in. And we do have an ability to lock your interest rate in up to 120 days before you even find your property. So you can take advantage of today's rates. As they're rising, you can just lock yourself into a lower rate before you find the property. Most lenders will only allow you to lock your rate in after you found the property, but at PRMG, we can actually lock it in before you find it. So
wow, that's amazing. Yeah, thanks for letting us know, because a lot of people don't realize that, and that makes my job easier too if people know what they're looking for.
yeah.
Yeah, definitely. So you guys, thanks for watching. Again, this was 𝗦𝗢𝗏 Rudolph. I'm going to put her contact information right above her screen right there. So you can call her, email, or text her for any questions that you might have. 𝗦𝗢𝗏, what's the best way to get a hold of you for somebody?
The best way to get a hold of me is just to call me. I'm always available, 808-727-0518. And
Awesome.
I always pick up my phone, so or I'll call you back if I'm on the phone. So yeah.
Yes, she does. I can vouch for that. Yeah. Okay. Well, thank you again, Katalia, for your time. I really appreciate it. And keep in touch with us and let us know if you have any other great programs that people might benefit from in this market.
Thank
Okay.
you so much, Sandy. It has been an honor. Thank you.
Thank you so much. Bye bye.
Bye.